Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. Happy Monday, everybody. This is Monday afternoon. It's not Monday morning. We're going to try releasing this late afternoon, seeing if everybody enjoys it. So let us know what you think about the timing, that comment section below. But what are we talking about today, Lanny? We're going to be talking about 3 stocks that I want to invest at least $5,000 in 2025. You're going to learn about the 3 stocks. You're going to see how much I may or may not have already put into them and see how much more I need to go to get to that $5,000 mark.
Ooh, Bert teasing it with the $5,000 threshold on 3 stocks that he's trying to get to, guys. Before we talk about those 3 stocks, hit that subscribe button, guys. Give us a nice thumbs up. It's the DD rocking with you pretty much 5 days a week on Monday, Tuesday, Thursday, Saturday, Sunday. Let's go, guys. It is the first full week of February. We have made it through that first month here in 2025. Bert, it's all about building positions here, guys. Guys, this is the year of cleanup, the year of focus, the year of concentration, the year of just simplification of the dividend stock portfolio for both Bert and myself here. And now Bert has got some moves that he's making, a splash that he's taken, and it's not going number 2 in the toilet here, guys.
There we go. There we go. So part of what this experiment is, why am I picking $5,000? As we've embarked on this cleanup journey, Lanny, one of the things I've noticed is I have a lot of positions that are between like $1,500 and $3,000 that are, I went to buy them. I didn't really go all in at the time I bought them. And now I'm kind of stuck with these positions I don't want to add to, but they're not substantial enough to really make an impact. So I'm setting a goal going forward. When I do want to buy a stock, when I do want to initiate a position, I'm going all in and I'm putting in at least $5,000 into each stock that I am buying.
Wow. Yeah. I mean, so now you've gotten rid of probably a lot of the smaller ones. Now you're in this like over $1,000, $1,500 threshold, which now you're still considering kind of small in the grand scheme of things.
Yep.
Where they're probably providing you $30, $40, $50 in dividend income, where it's like, okay, that's great. It's not huge. Even if you 10x'd your investment as well in however many years. Okay, so now it's worth 10 grand. Now, what if you had 5,000? Now that's worth 50 grand. So you start to go, okay, you're starting to see like there's a little bit more magnitude here.
That's right. That's absolutely right. And I couldn't agree more with it. So you'll start seeing me asking that question, am I adding to this 1,500 position or what am I doing with it? Yes or no? Let's figure out where I want to put it. So that's where these 3 companies, I've wanted to put money in. So these would be the recipients of any funds that I sold or any new money. Let's rip the Band-Aid off here, Lanny. Number 1 has been the stock that I just most recently bought in my portfolio. This is one where I decided, hey, I'm just going to move into it. I've talked about it. I'm going to sell some stock, throw the proceeds into here. Who is that first company? Hershey's, ticker symbol HSY. Yeah, woo-wee. All right, so
Hershey, Reese's.
Yeah, all those great brands. I love the consumer staple stock. Right now, they are yielding 3.6%, which is pretty juicy. Over time, to date, I have 16 shares of Hershey's that are at $2,388. I put in $2,398. So if I'm going to build this one up to $5,000 here, Lanny, I need to put in another $2,612 into Hershey's, basically doubling up my position, buying another 17 or 18 shares of HSY.
Man, yeah, I mean that's still a lot of dollars remaining to get there. Especially, so you mean you need a little over what is that, Bert? Almost 15 shares or so.
Yeah, that's pretty much what it is. It's at 149.25 at the time of this video. It's 17 and a half new shares. So right now, this position is going to get me a pretty solid amount of income, Lanny. It's making $87.68 of dividend income going forward with the 16 shares, since it is at that 3.67% yield.
And it's a higher yielding stock.
Yeah, it has strong growth over time, although I'm not expecting it now. I'm not expecting strong growth in 25, but I'm expecting stronger growth when it comes back and getting back to it. It has a pretty manageable payout ratio. If I double up this position and add a little bit more, having almost $175 annually in dividend income from Hershey's would be a very solid mark. Getting it to that 5K, I would freaking love it.
Yeah, I mean, you'd be getting at least a full share a year plus some. Hope, I mean, more than likely. Actually, you hope not because you want that price just to pop, baby. No, I'm kidding.
Yeah.
Um,
Take it
all
easy
right,
with
so
it.
that's Hershey's, but yeah, you need $2,600. Man, it's not like you have that just sitting around in your pocket. You know,
No.
it might take some time. You want prices to stay down, obviously, as long as you can. I know you've been nibbling every day. It feels like the last week or so.
Yeah. And look, I built 2,400 is a solid position. It's not where I want it to be, but say there's the price pops for some reason, I'm at least happy I've gotten $2,400 into Hershey. So it's not tiny. It's not the $1,000 position I'm complaining about.
Yeah,
So I'll take it, but I want more. And that's where I'm going to go into the second stock here. Another one that I want more.
more.
I want more.
Feed me more.
Feed me. Get the Zeke gift
Get
going
that,
up here.
get Rye, whatever his name is, Ryback going.
Yeah.
WWE. If you know, you know.
Number two on this list, Mondelez, ticker symbol MDLZ. So I've been doing consolidation in my wife's portfolio. I targeted Mondelez along with Hershey's. Mondelez, I put in $2,491 into. We have bought 42.36 shares. Currently, their yield is over 3%. It's about 3.25. So we need to put in, we're getting $80 of dividend income from Mondelez. I basically need to double up this position, Lanny, to get to that $5,000 goal. I need to double it up, get about 43, 44 more shares, assuming no drip before I hit that. Then, like Hershey's, my dividend income from Mondelez would be $160 annually, which I would be very happy with if I can get them up to 5.
Mondelez, make Bert's life easier and just buy Hershey's.
Yeah.
You would be right there at your $5,000 position.
Yeah, you're true. Hey, nobody said how I have to get across the river, right?
Yeah. Now it would be so funny if you had $5,000 of both.
Yeah.
And then they do merge and you're like, I got
Yeah, the Monday before this video is released in the afternoon, they combine, and I'm like, well, hey, we're here.
I did it. Yeah, obviously Mondelez, a big. You're really two big consumer stocks that you've been stacking throughout almost every week.
Mm-hmm.
Guys, we haven't come out with the purchase video. It's my fault because I haven't been as active as this guy over there. But you need $2,500 more dollars, just a little bit less, like you said, than Hershey's. Adding almost 44 shares is what you need. You'd get about $160 in overall income from the position. So between that and Hershey's, if you got there, I mean, you're talking about over $300+ in annual dividend income.
Yeah, I like it. So let's do number 3 on this list. It's the company I've been buying, Alphabet, ticker symbol GOOGL, or Google. This one's been a little different. I've been buying it between my account and my wife's account. So what you're seeing is you're going to see the aggregate of the two accounts combined. I own at least $5,000 aggregate of Google between our two accounts. We built up to 19.81 shares. We put in $3,600, and the market value of Google is now $4,442 because it has appreciated 12% since the time I've purchased it. And
wow.
Yeah, I love this company. I really wish I would have just jumped into the 5,000 when it was in the 170s. When I started buying, I wish I would have gone ham and gone all in. That's part of what's prompting me to do this, Laney. That's what's prompting me to think about this more strategically, prompting me to just go ham, invest it, get it to 5,000 as fast as possible so you don't run into the appreciation situation that we're talking about now with Google.
Yeah. I mean, it's already back up to over $204 a share now, Bert.
Yep.
Didn't we have like a flash drop, where it was like in the 190s again? That's
when I sold. Who was it? I sold Walgreens out of nowhere in my wife's account. She had about $800 when it. It was. That's exactly when this happened. I sold Walgreens, 800, moved it all into Google, and that was the day before Walgreens popped up because of the acquisition rumor, then came right back down after it suspended that dividend. So that's the kind of stuff I'm talking about. Why am I messing around with $800 in Walgreens when I have a position like Alphabet that I want to get to $5,000? So here we are. From a market value perspective, I need about $1,000 more. Cost basis, I need $1,400. I'll take whatever I can get to at least my position of $5,000 in Google. I'm not going to be picky about this one. That's a quick $1,000 to get the market value up above 5 at its current prices.
And
So,
if you did that, yeah, you had about 5 shares. You'd have 25 solid
yeah.
shares
Yeah.
of Google. Now, if you sold off some stock that paid a dividend to get there, you'll probably, have to wait a few years to get back
Yeah.
to that income.
But look, if we're selling a position I have that's $1,000, it might be at a 4% yield. We're really only talking about $40 of dividend income to where I feel better about the appreciation that I could get from a Google, which I hopefully would make that back up from market value in a faster time. That's why I'm talking about selling these small positions, Lanny. $40 of dividend income sitting in a stock that I don't want to add to isn't really moving the needle that much for me anymore.
Yeah, I mean, can't argue that. So how much in dollars do you need then right now if you wanted to hit all three?
Yeah, if I wanted to get the market value above $5,000 for each, that's at least $6,000 I need to drop into there. If I want to do it from a cost basis perspective, it's going to be a little bit more. It's because Google has popped, it's probably going to be about $6,500 from a pure cost basis perspective. All doable. And I'm not saying it has to be new funds, Lanny. I think that's the key point I want to leave here. I'm not saying it's new funds. It could be me selling stocks I don't like, stocks that no longer fit my needs. It could be small positions, it could be not. An example of this is I sold my wife's Spartan Nash years ago. I still kept mine. I have $1,400 of my own Spartan Nash. At this
Ooh,
point, do I really
ooh,
care that much about Spartan Nash? Am I going to add to it? No. So why not take it and put 700 in Hershey's, 700 in my version of Google, and keep adding to the account because Mondo's is in my wife's account. So that's how I'm going to start thinking about my portfolio a little bit more in the first quarter, and that's where I
yeah,
want to get the funds to do this.
yeah. So I mean, it's all about what you think from the future standpoint of what these companies are going to do,
Yeah,
and not sacrificing on the long-term dividend growth potential. Um,
yeah.
Interesting. So is this like a 2025 goal, or is this just like, hey, I'd love to get there at some point?
I would like to make it a 2025 goal because one thing that's happened, the stocks when they pop up, they can pop up quickly, Lanny. So while it's on my mind, while it's at a value today that I like, I might as well just do it, get it to where I want, and then I can keep building and keep doing. Because you might not get a second crack at it again. Hopefully.
You might not get that second chance, but guys, let us know what you guys think about these three stocks. Bert getting to 5,000 in Hershey's, Reese's, to
Mm-hmm.
getting into Mondelez, to getting it into Google stock. Do you guys like that idea of building out bigger positions, solid positions when it makes sense? Do you think he should do it with as much fresh capital, or should he slim down stock positions such as Spartan Nash, which is SPTN? Holler at us in the comments.
Would love your feedback, everybody. If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert the Hurt and Lanny from the Dividend Diplomats, guys. Over and out.